Hey, Internet, welcome back to another episode of New Foundations, a podcast brought to you by Acropolis, the Bitcoin Treasury company. I'm here with Chase and Kevin today for another episode of our advisor series, giving you all a chance to get to know our bench of advisors. Kevin has been a finance professional for decades, and he really brings a wealth of knowledge to our team. So, looking forward to learning more about him with everyone today. And yeah, welcome, Kevin.
Thank you, Mason. Thank you for inviting me here. Glad to be here. Chase, glad to meet you as well and have this conversation today.
So let's go ahead and start it off. If you could recount your initial encounter with Bitcoin and what aspects of it piqued your interest, given your career in finance.
Yeah, it's a great question. So, I think I first heard of Bitcoin back in 2013. I was out in California. I had worked for 2 years at PwC and was doing a year of volunteer service to kind of reset things. And one of the guys that was there with me, he was I think a software developer by trade. And he started talking about Bitcoin. And I was like, what is this? And I wasn't a techie person, so I kind of dismissed it. And then I don't really think I paid much more attention to it for probably a couple of years. But the weird thing was I was primed for it. At that stage, I was kind of a full-on Ron Paul enthusiast. I was reading all the kind of pseudo anti-establishment material, Murray Rothbard and End the Fed and whatnot, The Creature of Jekyll Island. So I was definitely primed for Bitcoin, but it just didn't register with me. I think I was also a bit of a doomer coming out of, 2008 crisis. I just figured this whole world is falling apart. We're going to be out in the backwoods needing to survive on our own. What is this digital currency going to do for me then? And so, like I said, didn't really pay much more attention to it. And then, when it peaked in 2017, I thought, well, it's still around. What's going on here? And then it really wasn't until the third time. I think that's a common story for a lot of us, is these multiple interactions with it. It just doesn't die. It's like the Hydra. It keeps coming back into your life. And so COVID hits, and I'm working from home and somewhat bored with my day job, and I'm starting to see all these different influencers talking about Bitcoin, Preston Pish, Parker Lewis, etc. And for me, I think the biggest switch where it finally clicked was, instead of thinking about it as a medium of exchange, thinking of it as a store of value, where this is now where we're going to park value. And because of the scarcity and the 21 million cap, it's just inevitably over time going to go up. It's going to have its moments of animal spirits take over, but that was a big mindset shift for me. And at that point, started to really get interested, and then went down that rabbit hole of reading everything I could about it, getting over the initial fears of buying it on Coinbase at that time, moving it into your own cold storage wallet, and trying to orange pill a few friends. And then, you know, at that point, kind of was fully indoctrinated into the Bitcoin community in some ways. But then over the past couple of years, been busy with kids and getting married, and so, to be honest, haven't paid as much attention probably over the past 18 to 36 months. But of course, all eyes are on Bitcoin right now. And then, talking with you guys, understanding what you're trying to do, very much back into the thick of it.
Yeah, I'm curious, Kevin, what was that first rabbit hole that you went down? Because, the Bitcoin idea is enormous. It touches all aspects of life and finance, economics, energy. You mentioned kind of the store of value, but to have that aha moment, you must have gone down some rabbit hole to get there. So what would you say was the first rabbit hole? Was it supply and demand dynamics or energy or the technology? Where'd you start?
Yeah, that's a good question. I think one of the things that clicked with me, maybe not immediately, but one that stands out, was some of Parker Lewis's material around, gradually then suddenly. This idea that the slow build of, different people and entities entering into the space, and it mirrored my own experience of kind of having these multiple touch points. And his one piece, I think it's called The Great Financialization, where he talks about how kind of the indignity that all of us have day jobs. We work, and then we have to go put that money into what can sometimes seem like a casino of Wall Street. And my mom was a Catholic school teacher. She wasn't making much money ever. And just the idea that someone like her has to work with financial advisors to just preserve what she's already earned uh, felt wrong. I knew that was wrong. And I think the way that he spoke about it in that piece really solidified the idea of, yes, this is the exit for me. I was a finance and accounting major in college. I knew enough about the markets to probably be too smart and think, well, this is something that I can try to time, or I don't want to play their game. And so I think once I saw it through that lens and Parker was able to describe it for me, I thought this is a game I'm willing to play. And knowing that it was going to be a longer term investment, it was going to be something that, as Michael Saylor talks about, carries value through time. It's going to transport wealth of today 20, 30, 40, 50 years into the future. And I felt much more comfortable with that than locking up money in a traditional 401k or IRA. Like I said, I was a bit of a doomer then, and always felt like, okay, at any moment the shoe's going to drop, and that's going to really annoy me. Capital preservation was important to me, and there's definitely a time where I was trying to time the market, and okay, when is the best time to get in? And for me, knowing that Bitcoin was going to preserve that value over time, and that it was going to be a long horizon, I was like, I can play that, can be comfortable with that. And I think also two other points that really were turning points for me and part of the rabbit hole, just understanding that there was a 4-year cycle, that there is this somewhat understandable pattern where the price will go up, pull back, animal spirits will take over and kind of drive out this disproportionate increase, but then it kind of settles back down. And then when you also zoom out and look at the Bitcoin price on a log scale, and you can see that happening over time, but in a much less drastic manner, and you can see that it's just moving up. That to me gave me this confidence that there's a pattern here, and I felt confident that as long as I'm sticking with the idea of holding for a 10-year period, I said I'll give it 10 years. If it does nothing, fine, it does nothing. If it does something, then it was worth it to me. So I think those are kind of some of those bigger turning points.
Yeah, it definitely seems like you come about things from a first principles point of view. And we've mentioned that you work in traditional finance. I'm not sure how much you guys have began to integrate Bitcoin in any operations, if you have, but how do you see this evolving?
I
Hmm.
did make a soft attempt back in 2020 for my prior company. I was working for a digital marketing agency. We were cash flow positive, generating 15 to 20% each month, and so we did have cash that we could have been investing, but we were not the primary owners. We had sold the company in 2018, and so all of our excess cash would go up to the parent company. I think that's something that stands out with Michael Saylor and what he's done, because he's retained so much control of MicroStrategy. He can make the types of investments and the types of allocations that most CEOs and founders just don't have the flexibility to do. And so I did work a little bit with again, Parker Lewis and Michael Tanguma to put together, a small little white paper of, hey, this could be a way for us to, set aside some of our savings and allow the balance sheet. Chase, you've talked about it in previous episodes. Allow the balance sheet to do some work. We were doing um, a lot of different things to grow the business from the P&L side, trying to grow revenue through acquisition, trying to grow revenue through um, gaining new clients, a new tier of client. We grew really quickly at this digital agency I was working for, and it presented new challenges where we weren't playing small ball anymore, and we had to play and compete against different types of businesses, different types of consulting agencies, and required us to be much more thoughtful about how we built our teams, how we structured our contracts. And a lot of it was chasing different things like international acquisitions or offshore, nearshoring resources down in Costa Rica. And it just creates a lot of business complexity. And so I think one of the things that Bitcoin allows you to do, if you're thinking about it from a treasury perspective, is that you can grow value in the business without adding too much more complexity, especially with companies like Acropolis coming on board, solutions like multi-institution custody that remove some of those concerns that folks would have around traditional custody arrangements or self-custody arrangements. And you get to focus on what is most valuable to your clients, when you know that your Bitcoin position over time is going to support the work you're already doing. And so I think about it from, I'm not much of a poker player, but I know you don't play every hand. And I think businesses right now are incentivized to constantly chasing busyness and work to stay ahead in the rat race. You're on this treadmill where you just have to do certain things, otherwise your cash is just burning. And for me, that is one of the benefits of introducing a Bitcoin treasury policy, where you're able to take the productivity you've already kind of gotten out of the system and put it to the side and know that it's going to be preserved. It's not going to just melt away, and you can focus on sitting out a round or two, and really thinking through what is going to move the business forward in the most meaningful way, rather than just chasing your tail.
Yeah, what you said there had me thinking about this idea that I think it's really hard for companies to still wrap their heads around, which is the idea that cash on the balance sheet is a liability. People think, oh, that's my earnings, that's my gunpowder for the future, but in reality, you're holding a depreciating asset that is guaranteed to lose its purchasing power over time. And so these companies, they have to do something to flip this depreciating asset, this liability, into something that is positive for the balance sheet. And kind of going back to what you mentioned at the beginning of your Bitcoin story, you came at it looking at Bitcoin as a medium of exchange. And that's kind of one of the reasons you discounted it at first. And I see this a lot when I talk to folks about Bitcoin, is they look at it and they say, I don't see anybody paying for things in Bitcoin, so it's not money. But we know that Bitcoin represents three things. It represents a store of value, a medium of exchange, and a unit of account. And I think we've seen in our own lives probably that first you adopt it as a store of value, and then because it's your primary store of value, it quickly becomes your unit of account. And then, as that value becomes a disproportionate amount of your net worth, or the company's, in a company's case, the cash or the money that they have on hand for operations, well, then you'll have to start selling it, even if you don't want to, because you like the long-term prospects of appreciation. That's the only money you have left at some point, and so you have to start clipping it for operations, and then it becomes a medium of exchange. But if you have an emerging store of value, it makes sense that people who understand the total market cap that Bitcoin is going after, that they wouldn't want to use it as a medium of exchange until we've reached full Bitcoin adoption. So how do you kind of, as a CPA, as somebody with a background in finance and accounting, how do you see the shift from, is it the path of store of value to unit of account and then to medium of exchange? And is it always going to have to move in that direction, or is there another order of operations that you could see coming?
I think that's a great question. I think right now, as we're still in Bitcoin's only around for 16 years, right? So we're still very early. For us, it feels like we've been through a lot, but we're still very early on. And that's what we try to tell folks is, oh, I missed the boat. And it's like, Michael Saylor's out there buying every Bitcoin he has. You think he's missed the boat? He already has the whole boat, and he's getting more. And so I do think the store of value is probably the best place to start for most folks, because there aren't people really using it, and your average person isn't using it as a medium exchange, and the unit of account doesn't matter as much until you actually understand that you want to have that on your balance sheet, personal or company wise. And so to me, that is a good place to think about it in terms of storing value. And if you look at something like home prices, most regions of the country have seen home prices go up more than makes sense. And that's in part because the home prices are absorbing this monetary premium. I was watching a podcast with Preston Pish and I think Leon Wankum, And he's talking about the M2 supply, I believe, going up pretty much lockstep with home prices and commercial real estate prices. And that's that capturing of the value, the monetary premium there. And so for me, there's also this idea of, I know Nassim Taleb isn't kind of persona non grata in the Bitcoin community these days, but his idea of Wittgenstein's ruler, that the ruler says as much about the table as the table says about the ruler. And so for me, the price of Bitcoin is what it is. And we kind of have to dismiss that. You have to think about, what is Bitcoin going to do for you, and how is it going to store your value and transport value over time. And the Bitcoin price is saying as much about what's going on in the Bitcoin network in terms of, technological developments, people adopting it, corporations adopting it. It's also telling you a lot about the US dollar or any other currency it's denominated in. It's telling you what's going on about those systems and how they are collapsing. And so when the price of Bitcoin tears here in the next several months, and as it already has, it's not so much that anything's changed about Bitcoin, it's that there's an understanding, a broader understanding of what Bitcoin provides for those who hold it, and the store of value as that chief mechanism early on.
Kevin, I'd like to ask you something pretty topical here, because President-elect Donald Trump is putting his cabinet together, and as a part of that cabinet, there's a Department of Government Efficiency, or they call it Doge as a joke. But does that concern your Bitcoin thesis at all, if the United States is able to get its fiscal house in order per se? Or I'm just curious to hear your thoughts on that.
That's a good question. My the cynical part of me says no. I think there's going to be a lot of changes and shaking up of the government with the new administration and some of the individuals he's bringing into the government. But when we look at how much debt the U.S. has and how much we need to finance, take on additional debt to just pay for the interest on that debt, it is one of those cycles that I don't see us getting out of it. I am not as well versed in some of the macro elements of this, of what happens if we actually do adopt a strategic Bitcoin reserve at the national level. What will that do for us? I don't have an answer for that one, but it doesn't sway me in terms of my position. It's something that only, I think, bolsters that position of, you want to have some of that on your balance sheet in the rare chance, not the rare for us, but in the rare chance it does just go up infinitely, like we all think it will.
And when you think about a company holding Bitcoin on their balance sheet, today there's a few different ways to do that. You could hold the spot Bitcoin in multi-institution custody, which of course we at Acropolis are huge proponents of. But we're likely to see companies taking kind of the half measure of buying IBIT, buying the Bitcoin ETFs, maybe buying exposure to companies like MicroStrategy that themselves have Bitcoin exposure. So I guess as somebody who's sat in the finance seat at many different corporate operations, how do you see the benefit of holding the actual underlying bearer digital asset versus all of these other instruments?
So yeah, if you're looking for just the price increase exposure, then a lot of different vehicles can work. If you just want to generate some return on the cash you already have, then yeah, investing in MicroStrategy might be an easier play to do than self-custody or multi-institution custody Bitcoin. Same thing with the ETFs and whatnot. But to go to the kind of medium exchange and the technology of Bitcoin is you want to own the actual asset. You want to have this money that is immutable, indestructible. You want to have access to that, because you don't know what types of gimmicks various players in the industry are up to. I think there's a healthy level of skepticism within the Bitcoin community, and there's also a healthy level of skepticism towards the Bitcoin community. Someone who isn't familiar with Bitcoin comes in and says, well, this is just Tulips 2.0. And they're not entirely wrong. There is an element of the price action of Bitcoin that is responding in the same way that we would have seen in other manias, whether it's tulips, Beanie Babies, pets.com. Those are real manias, and Bitcoin's price does capture some of that, but it does normalize because there is an underlying technology there. Um, and so you want to have access to that because there are going to be different players within the Bitcoin system that are going to try to take advantage of it. They may try to pump in some of the, you know, not so great practices of traditional finance into the Bitcoin community, into the Bitcoin ecosystem, and that's going to result in various types of blowups. We've seen it in things like FTX and how that creates havoc in the system for a while. That's not going to stop. You're still going to have folks trying to rig the system as best as possible for them or whoever they're representing. And so you don't want to be left exposed to, how well supported is the ETFs or MicroStrategy. There's company risk there. There's risk in terms of Michael Saylor as a personality. You want to have access to and control over the actual asset, not some tangential element of it. Now, having said that, get off of zero, right? Get exposure to it. Get some of the hype that comes from the past couple of weeks when the price has ripped and you see, people's lives changing overnight. Get a little bit of feel for that. I think it was in the conversation with Grant. People come for the number go up technology in some ways. You get attracted by the returns and the possibilities, but you stay for the Bitcoin values and community. And so the sooner you can start to participate in that and understand what it is to be part of the Bitcoin community, the quicker you will get through your own rabbit hole. You have to do the work. You can't escape the work. And so if a company taking on a MicroStrategy position is the quickest way for them to get exposure, by all means do that. And then as you get deeper into the rabbit hole, you'll see the need to start shifting it to the actual Bitcoin asset itself.
Yeah, just to kind of double tap that for a second, it sounds like you're really referring to the counterparty risk,
Sure.
and that if you properly custody the underlying asset, you can actually remove all counterparty risk. But one other thing that I think it reminds me of this idea of companies who are taking half measures to buy IBIT or the ETFs rather than custodying the underlying Bitcoin. It reminds me of a lot of when the big companies first decided that they had to have a website, and they would, instead of hiring an in-house team and managing that website themselves, they would go hire out an agency or somebody on a contract basis to spin up some little WordPress website. And obviously, looking back on that now, it's clear that every company needs to have the capability to manage their own website. And I think in the future, every company is going to need to have the underlying capabilities to manage their own bare digital asset, Bitcoin.
Yeah, I think that's a great analogy. And you only understand the need to manage your own website after you've seen someone else managing it, after you've seen some of the challenges that come about it, after you've gained some familiarity of, okay, this is what works, this is what doesn't work. And what I really liked in your recent conversation with Rich Kerr was the idea of having a partner as you're going through your rabbit hole. You want to have someone that you can bounce ideas off of, that has a different perspective than you, but has a similar set of values, so that you can kind of figure out what are my blind spots and what am I missing in this story, and what should I be considering. And the quicker you can do that, find that partner, the quicker you can make it through that rabbit hole and realize, okay, this is the best way for me to, create a position, maintain a position, grow a position, etc.
I just want to mention we are approaching 94,000 US dollars for one Bitcoin while we're on this call. So breaking all-time highs, and super exciting to be on the phone with you, Kevin. But let's move over into Acropolis. Let's talk about what was the driving force behind your decision to be an advisor for Acropolis, and what really is getting you excited about the business.
Yeah, great question. And again, thank you for inviting me to be part of this call and part of the advisory team. When I was reflecting on that question, the idea for me is finance and accounting have always been kind of the offensive line of the business unit. They're there to just don't make mistakes, make sure you're in compliance, make sure your reporting's clean. provide the executive team and the sales teams and the product teams with the right information to make the right decisions. They're the stars, and finance is really there to provide the information of how to best make certain decisions and how decisions fared. And so with Bitcoin and with Acropolis, it puts the finance team in a position to be a contributor on the offense. You can now grow the balance sheet. You can now create value outside of just generating revenue for the business. And so now cost center becomes a profit generator potentially, or a value generator. And so for me, that's the most exciting part, is that Acropolis is going to play a part in that for many companies of many different sizes. And what better place to be and to help out, for something that I think those of us who come into the Bitcoin space see it as, a savior of a lot of different broken parts of our economy, our political system, and whatnot. And so we want to give back to our society. And so what better way of doing that for some of us that had the business skill set and the finance skill set than to help onboard and bring Bitcoin into their system.
It's such a good point that typically a treasurer that's managing the balance sheet is thinking defensively, like let's just maintain as much purchasing power over time as possible. But that now with Bitcoin as a defensive technology, ultimately as a store of value technology, you would think, okay, this is not offensive. This is not really about growth. This is, when you really understand the underlying asset, you understand that it's purely kind of a savings technology. But because we're so early in its path to becoming that emerging store of value, and we're so early in global adoption, that you get all of the savings benefits, but you actually get the appreciation benefits. And so one of the things that Acropolis is going to be really pushing is that, hey, business, the earlier you adopt this technology and this asset, the greater the upside, the higher the growth potential. So obviously Bitcoin does a lot to sell itself with things like number go up, like you mentioned, but I'm curious, what challenges do you think we at Acropolis and obviously you in support of us, what are we going to bump into when we try to go speak to somebody like you on the finance side of a business? What are those 1, 2, 3, low-hanging concerns that if we were approaching you at a business and you weren't already orange pilled, that you would kind of come back at us with?
The challenge would be like we're still so early on that kind of the S curve adoption, and that people aren't familiar with it. And for those of us that are familiar with it, with Bitcoin, it became obvious at some point. But I also think what is obvious to us won't be obvious to many others. So it's going to be a matter of, we can't necessarily, I wouldn't want to lead with number go up because it sounds a little too get rich quick schemey. If I'm someone in the finance department and I'm not aware of Bitcoin, and I'm only hearing about it every 4 years and the price goes up, I just have this track record in my head that it's another mania, and I don't want to get duped. People don't want to look dumb, and so that's why they say, I missed the boat. And so they kind of can resign to the fact, like, I don't need to think about this anymore, I've missed the boat. And so we wouldn't want to lead with the number go up because that's just, I just think it screams scammy. And so that's why I like to think about it in terms of capital preservation, and the fact that it is still tied to the numbers go up, but it's coming at it from a slightly different angle. Because the other question I would get sometimes, like, well, Bitcoin doesn't generate cash flows. There's no dividends. There's no cash flow from it. Where is the value in that? And so the angle to me is more of, to your point, it's the savings technology. It's going back to that idea of, we've already done the work. The product team has done the work. The sales team has done the work. We've earned this cash. Now what are we going to do with it? And we already have depending on how large the business is or how complex it is, they're already doing a variety of different things to maintain that cash or to grow it a little bit. And so for me, the idea would be, I think Michael Cera talks about this as well, is like, you're taking the ice cube out of the fire. You're letting the ice cube actually just stay frozen, and you're taking it out of the system that is eroding it. And so I think coming in from that angle of, the work's already been done, protect the work you've been doing, And to your point, giving a head nod to the number go up, but not leading too much there in terms of um, how big it could be. And maybe also taking a look back at, depending again on how sophisticated operations are, doing some back-tested analyses of saying, okay, well, what if you had taken a position 4 years ago or 3 years ago in Bitcoin at 1%? What would things look like today, to show them how the future could be, and say, well, the future's not guaranteed, but we've seen this pattern repeat, and do some of that, and even tell them, what if we picked the worst date to buy in the past 4 years? How does it look? And also getting them comfortable with making as small of an allocation as they want, not trying to sell the whole boat in one go. It's like, are you comfortable making a 1% allocation, 0.5% allocation? I mean, at some level, it has to be worth the effort, but getting them comfortable with the idea of it's better to get off of zero and at least get some exposure to it than to not be in the game at all. And I think, again, going back to Michael Saylor, he never stops buying. And so the idea that you've missed the boat is just, it's not a good one to sit on.
Yeah, you definitely haven't missed the boat. There's a lot of boats that are going to be going across the ocean repeatedly. So I like the idea of starting small. And, I think Saylor has sort of gotten away from this recently, in that he talks about his $10+ million Bitcoin price prediction over the next 21 years, which I certainly agree with. But, when we're talking with businesses, I think it's important to just talk about the benefits that they can see in a relatively short term and not go too grandiose. And I also say this a lot: people don't get Bitcoin until they have a reason to get Bitcoin. So I think the reason for businesses now is your margins are compressing, your cost of insurance, your cost of labor, your cost of goods, everything is going up. You're beginning to become upset with the way that your government spends money, and it doesn't seem to be benefiting you, and you're looking for a solution. So Bitcoin is that solution to debasement and to saving the value that you put into the world.
That is a really good one, in the sense of, you need to understand what that individual's, what's keeping them up at night. What is their specific pain point? And it might not even be about the company. It might be they want a promotion or something like that. So you have to be very personal and understand, what are their motivations, what biases are they bringing into their work as they perform it, what are their goals, and speaking to them where they are currently, and trying to gently unpack some of that, and show them, we have the saying, Bitcoin solves that for everything. And to a certain extent, it can. And so take that for what it's worth, and figure out, how can Bitcoin address this person's specific need? And then also, how do you help them get partnered up with someone else in their organization? That, again, that idea of having partners, where it's easy to dismiss one person. Any one person can look like Don Quixote, charging a windmill of a $10 million Bitcoin price. We don't want to go there. I mean, to us it might be obvious and inevitable, but for the average person, we just look quite insane. And so, figuring out what are their motivations, what are their concerns, and how Bitcoin can potentially meet them and address that. And even if it's not directly about their business, but just some interesting piece around Bitcoin. There's so many interesting people involved in the Bitcoin ecosystem, whether it's someone heating their pool in the wintertime with Bitcoin. Just figure out how to make a personal connection with them. And you start to get the brain going of, oh, this is not what I thought it was. This is something else. And I think that's why it takes 2-3 interactions with Bitcoin before someone moves, because they come in with some prepackaged notion, and you need to get that changed by someone else presenting to you in a different way that isn't going to be obvious, even to the person themselves.
So what upcoming trends or developments in the Bitcoin space are you most enthusiastic about?
Yeah, so for me, I think one of those interesting things is the development of companies like Acropolis and OnRamp, providing solutions for corporations, small businesses, because that was kind of the biggest challenge I had back in 2020. I understood it from a personal investment standpoint. I was trying to orange pill friends and family, tried to orange pill my CEO, but I didn't really have the tool set to implement it. I was kind of out there, kind of a lone voice shouting in the wilderness of, okay, this is going to save us time, energy, and money, but didn't have all the tools around me. And at that point, we didn't even have the FASB ruling of Bitcoin at fair value accounting. So it would have presented additional complexities that for me, knowing that we didn't really have the full discretion to make that type of investment, it just made it much harder for me to really kind of dig in and make a stronger pitch. So I think with OnRamp providing the multi-institution custody solution, that to me now makes it a no-brainer. It's no longer me as a CFO trying to figure out custody with either one trusted party or having keys in my desk next to me. That just never made sense for any meaningful amount of investment. So that to me addresses a big part of the challenge with corporate. And then also Acropolis coming in and providing some more of that back office support, because not every company, most companies are not going to have the right level of experience and knowledge and commitment. Your average back office accounting person, Bitcoin is not really speaking to them, not in a technical way. And so you're going to need professionals to help navigate the different challenges and understand the different cycles of Bitcoin. Because right now, companies that own Bitcoin on their balance sheet, they're seeing their runway go up hand over fist, and they're going to see that happen for the next several months. And so you're going to, right now, every day that you're holding Bitcoin, you're extending your runway. If you're a smaller startup, you're now in a position that you can last a little bit longer. But come midsummer next year, fall, when we might see the Bitcoin price peak a little bit, you're going to want to figure out, how do I strategically sell some of this so that I can now fund my operations off of quote unquote the gains that I've made. And so there is going to be some very tactical pieces there that is going to need a professional's hand, because when the price goes up the way it does, as we've seen it go up in these cycles in the past, your psychology kind of breaks down. The numbers don't make sense. You see a $10,000 candle. What was it last week? I think we saw a very close to $10,000 candle. That's a big move. That doesn't happen in many spaces, especially if you're talking in a treasury department. So you're going to need folks to help navigate that and make strategic selling decisions to fund the future operations.
Yeah, we talked to a lot of CFOs such as yourself, and a surprisingly large amount of them own Bitcoin on their personal balance sheets, and they've already done the work to orange pill friends and family. And what I think is interesting about that is that when you try to convince your parents or your friends to buy Bitcoin and kind of educate them on the benefits, you're taking some social capital risk, some reputational risk, but it's definitely a different ballgame if you're a CFO and you're trying to incorporate Bitcoin onto your balance sheet. Because even if you believe in the long-term prospects, for example, you could mistime the market and you convince your CEO to buy. He convinces the stakeholders, the investor base, that this is a good strategy. Bitcoin drops 30% the next day, and you could be out of a job. And so there's real career risk. And so I'm curious, from the seat that you've been sitting in over the last couple of years, how have you seen the career risk shift from, I probably shouldn't mention Bitcoin or push too hard for Bitcoin within the business, to, maybe the career risk now is, if I don't at least mention Bitcoin to my team as a strategic opportunity, I might look like I was unaware of this opportunity. So talk to me about the career risk, because one of the changing environment of the career risk here, because one of the things we do at Acropolis is this idea of air cover as a service, where if a CFO wants to just sit in the corner and invite Acropolis in to come and be that educated third-party expert to speak to the benefits of Bitcoin on the balance sheet, we'll do that, and they don't have to take that career risk themselves. They can just invite us to come do that in the form of a free consultation. So we think that that's a really great way to get in the door. But how have you seen the career risk shift over time?
Luckily, I now work for someone who's a Bitcoiner himself, so no career risk in that regard. It's more of a timing challenge for us. But I do think the career risk is down when you have BlackRock openly speaking positively about Bitcoin and creating products to support Bitcoin. When you continue to see someone like Michael Saylor buy Bitcoin and the returns that it's generated for the company, and a lot of others are slowly coming on. The herd effect, I think, is going to, it may not fully take effect this cycle, but it's going to be harder and harder to ignore that the companies who are investing and allocating to Bitcoin and holding for 4 years are far surpassing those who aren't. And so I think the career risk is going down. And I think to one of your earlier questions, that is an angle to use when talking to someone who is not as familiar with Bitcoin. It's, hey, you at least want to be aware of this. You don't need to make an action on it right now, but this is something you should be aware of. I remember telling one of my financial analysts probably 3-4 years ago, and I said to her, you should attend the online, I think it was Michael Saylor Bitcoin conference. Just be aware of it. You don't need to do anything with it right now today. We're not going to be able to do anything with it at the company, but just be aware of it so that you can speak intelligently about it if you do get asked. Have some knowledge around it. Become that go-to resource. I know, within Acropolis, we talk about the future role of the Bitcoin strategy officer. Why not sell that for someone who, is trying to climb the corporate ladder? This is a new path. It's unknown territory. Growth comes at the the border of comfort and discomfort. So why not help them navigate a new frontier and highlight this is a different world. I mean, AI. I mean, all of us are probably using ChatGPT in some way at our job that was unimaginable only 2 years ago. And so technology is going to continue to change, continue to grow. We already know that we have to continue to learn after school if we want to continue to progress and provide value for our company and for those around us. And so Bitcoin's no different. You want to at least have a knowledge base around it so that your CEO doesn't bring you in one day and go, hey, why didn't you tell me about this? Why didn't you tell me about MicroStrategy? Why didn't you show me that this is a massive return? What are you doing for me? You're a cost center. And so I do think the career risk is down, and there's going to be a switch soon where if you don't have some basic knowledge of Bitcoin, it's going to be harder for you to progress in your career.
Well, Kevin, thank you again for coming on. This was a fantastic conversation. I think folks are going to get a lot of insights out of this. So if there's any place that you want people to follow you or connect with you, feel free to plug it, but we'll go ahead and wrap it here.
Well, yeah, thank you very much, Mason and Chase. It was a great conversation. I really enjoyed it. It's been a while that I've had talked about some of these Bitcoin ideas. I've kind of kept it to myself and just slowly, quietly stacked. So it was nice to come out and be public with you guys. Nowhere to follow me right now. I try to keep a pretty low profile, but thank you again for your time.
Thanks again, Kevin. Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.